Welcome back, traders. It's going to be another interesting week in terms of data releases. The US Core PC Inflation Index, the Fed's favorite inflation measure, will be out this Friday, along with GDP growth figures for the fourth quarter. Early in the week, FOMC meeting minutes and a couple of Fed speakers could also set the tone in dollar markets. While outside the US, the UK will be also facing a busy calendar, delivering CPI inflation, retail sales, jobs data, and preliminary business PMI figures, as the British pound is pushing for some recovery. And don't forget about geopolitics. The latest security conference in Munich showed that relations between global leaders remain quite strained, while US officials have again showed strong interest over Greenland. So that suggests that USDJPY, pound dollar, and gold will remain in focus for another week. So let's have a look at what the technical signals suggest. Looking first at USDJPY, well, the core PC inflation index is expected to move slightly higher to 2.9% year on year, but I think that GDP growth figures might be more interesting. The forecast suggests a notable slowdown to 3.3% in annualized terms in the fourth quarter. So let's see if the data will manage to increase the odds for a rate cut sooner than later. Now, from a technical perspective, USDJPY is still supported near the 152 level. That coincides with the 38.2% Fibonacci retracement level of this uplift. There is another ascending trend line slightly lower at 151.30, which could support downside movements. And if we look at the technical indicators, we can see that the short-term bias is not clearly bullish. Actually, there is a bearish crossover between the 20 and 50-day moving averages. The RSI is below its 50 neutral mark despite sloping upwards at the moment, and the MACD is also within the negative region, which suggests that downside pressures keep dominating upside risks. So in order to shift the outlook back to bullish, I would like to see a clear close above the 156.45 region. That would push the price beyond its shorter term moving averages and towards the 157.50 region, while higher, a bigger battle could take place within the 159 territory, which blocked upside movements back in January. On the downside, if the price falls below 151.30, I expect some consolidation near the 200-day moving average, currently seen at 150.45, while lower, the 50% Fibonacci of 149.70 could block sharper declines towards the 61.8% Fibonacci level at 147.35. Now looking at pound dollar, while the UK will release a couple of important data releases, the highlights might be the unemployment rate, which is expected to hold steady at 5.1%. On the other hand, inflation could slow down to 3%. So overall, the data, if forecasts are correct, the data may suggest that perhaps a March rate cut could be possible. Investors are currently providing a 65% probability for a 25 basis point rate cut. And if the odds strengthen, perhaps the British pound could come under pressure as it's currently facing resistance near the 23.6% Fibonacci retracement level of this uplift near 1.3665. However, if we look to the downside, we can see that the price continues to face support near 1.36. So only if we break below this territory, selling pressures could emerge. And looking for support levels even lower, while the 1.35 and 1.3540 territory could still keep the outlook, the broad outlook, positive. There is a support trend line and the 50 passing through this territory. The 38.2% Fibonacci mark and the 50-day moving averages are all within this region. So perhaps some consolidation could emerge here before downside pressures push the price towards the 50% Fibonacci mark near the 200-day moving average at 1.3440. Any declines from here could then cause a sharper decline towards the 61.8% Fibonacci of 1.3340. Now, in the event that inflation figures surprise to the upside and the labor market proves more resilient than analysts expect, the price could break above 1.3665 to test the constraining zone between 1.3730 and 1.3765, and increases higher could then challenge recent highs, January's highs near 1.3815 and 1.3814. And finally, concluding with gold, which has been on the sidelines lately. Well, geopolitics could be a key catalyst for gold. And we can see that the price has been struggling to push above 5,000. It's currently supported around this level, but it has been failing to close above 5,090 over the past couple of sessions. So I would like to see a clear break above the ceiling and perhaps a move beyond 5,180 in order to target the resistance near 5,400. Well, from a technical perspective, well, it seems that the price is lacking bullish appetite. The RSI continues to fluctuate near its 50 neutral mark. The stochastic oscillator is turning lower and the MACD is decelerating below its red signal line. So that suggests that the price might be lacking bullish catalyst in the short term. However, I believe that the price is still quite supported, at least near its 20-day moving average. It may, well, sellers will have to push the price below 5,000 and more importantly beneath 4,925 to target the next support near 4,760. And then lower than that, the 50-day moving average and this key ascending trend line could also pose selling pressures within the 4,600 and 4,640 region. Any failure to hold here could then dampen market sentiment and could downgrade the broad outlook to neutral. So that's everything I wanted to share with you guys. Keep a close eye on upcoming data releases and geopolitical headlines. And of course, we'll be back on Thursday for more technical updates. So I wish you have a great trading session and we'll be back soon. So thank you for watching and see you next time.